let's run up a milli. If you're trying to kiss ass, better get a room. If you got no cash, let the credit boom. You gotta pay tax on the revenues.
What's up, guys? It is Sunday, 11:13 a.m. and I just wanted to check in with you guys today and do a little newsletter, market update, and kind of go over what may have happened with this recent dip and what could have caused it. So we had two main articles come out last week that was pretty big and that could have affected the market. So the first one, Bank of Russia calls for full ban on crypto. So Russia's central bank suggests making crypto trading, mining, and usage illegal, but owning crypto would be allowed. So there's a lot of overreaction to news articles like this. People just read the headline and then automatically make assumptions, but they said that owning crypto would be allowed. But they suggested that trading, mining, and usage illegal. So that goes back to the point in that green finance of how these countries are trying to ban energy intensive proof of work mining. So along with the news with Russia calling out for a full ban on crypto, and the next news article that I'm going to dive into, also in the equities markets, the equities sold off. Recently started to see that crypto started to correlate with the stock market, and if the stock market moves down, then cryptos move down. If the stock market moves up, the cryptos move up. So along with the Bank of Russia calling for a full ban on crypto, and along with the stock markets kind of falling off a cliff as well too, given the Federal Reserve saying that they're going to increase interest rates. So those are some of the main reasons why we could have saw the sell-off, as well as the Fed says digital dollar could fundamentally change the US financial system, but it's not ready to issue one yet. So they had finally released their highly anticipated report on the prospect of minting a central bank digital currency, or a CBDC, outlining potential benefits and drawbacks of what could be a highly significant innovation in American money. So it's funny how these things are lining up, because we just were doing the courses, and you're going to learn in Agartha Mission 1 about the history of money and how we are moving to an innovation in our money, and it's going to be placed on blockchain, and our money is going to be digital, tied to blockchain, and it's just the natural evolution of money, and they're calling that it would be a significant innovation in American money. But they're stopping short on taking a position of its implementation without the help of lawmakers. So they had a 40-page report. The Fed said a CBDC, which effectively combines the efficiency of cryptocurrency transactions with the safeguards of a central bank-backed asset, could fundamentally change the structure of the nation's financial system by altering the roles of the central bank and the private sector. So they're diving all into it. So here's that report that I had just mentioned that the Federal Reserve just released, January 2022, Money and Payments, the US dollar in the age of digital transformation. So if I go up here, edit, find, I'm going to type in wholesale. All right, so right here. So technological experimentation. So building a hypothetical CBDC would leverage existing technologies and systems. And then they said, considering the use of distributed ledger technology for wholesale payments, the board's technology lab has been studying how DLT could be used to support interbank settlement. And we already know the World Economic Forum, Central Bank Digital Currency Toolkit, had said that XRP is the best crypto asset designed for interbank wholesale payments, right? And it's built on DLT. So basically the Federal Reserve is seeking public comments on the matter for a period of 120 days, so 4 months. But it stopped short of outlining any potential action thereafter, save for noting the Fed does not intend to issue a CBDC without clear support from the executive branch in Congress, ideally in the form of a specific authorizing law. So we should see this year a law being introduced into Congress that would allow a CBDC to be introduced. So you can see here that the Federal Reserve is still making progress with their central bank digital currency. And then we had the Bank of Russia calling for a full ban on crypto. And then also the Federal Reserve is being a little hawkish, saying that they're going to raise interest rates and not print as much money anymore, and kind of scale back how much money they print. And that is why we've seen equity sell-off, crypto sell-off in this environment. So a little update on the Ripple Xrp versus SEC lawsuit. We have a new document saying that the SEC is desperately trying not to have to turn over the documents to Ripple. So Ripple has been for it seems like a year now trying to get the SEC to turn over documents specifying communications between SEC staff about Bitcoin, Ethereum, and XRP. But the SEC refuses to turn it over because they don't want the judge or Ripple to see what they were talking about. There's a lot of talk, especially like this lawyer right here has been following the case for a long time. Another one, Jeremy Hogan. They're saying basically, yeah, at this point, the SEC is going to surrender at some point because it's not looking great for them at all. They don't want whatever's in here to be uncovered. So they're just going to fight tooth and nail to delay until they have no choice but to settle. So as far as this is all good on. So this is great and amazing news for the Ripple versus SEC lawsuit, because once that is cleared up, it's lights out. The dominoes start to fall, and we're going to see thing after thing after thing that comes out that will just really propel and skyrocket XRP to the mainstream, and really in price as well too. So good news on that front. Ripple versus the SEC. Federal Reserve still pushing ahead with the digital dollar, saying it can fundamentally change the U.S. financial system. We had the Bank of Russia calling for a ban on crypto, as well as the Federal Reserve saying that they're not going to do easy money anymore, and they're going to raise interest rates in 2022. So that's the reason probably. So that is likely the reason of the dump, but we're going to watch the levels, watch the indicators, and see when there's any signs of bottoming out. We never want to just jump quickly into anything. Just let the weekly close play out, and just wait for the dust to settle. Once you see a move down like this, you don't really automatically see a skyrocket back up. It's got to work itself out. So you can just let it be and just really start plotting out some potential cryptos you want to stack up on if we do start to see them go back down to previous levels that we saw yesterday. So let's dive into a airdrop. So we found a new airdrop. It's Shimmer Network, and it's if you hold IOTA. So think about Songbird and how that's like the test network for Flare Spark token, or Kusama is the test network for Polkadot. Shimmer is like the test network for IOTA. So you're going to be able to earn free Shimmer just by staking it within your Firefly wallet. So let me pull that up right now, and I can show you the potential rewards of if you were to stake. So how to get Shimmer right here. So be part of the Shimmer launch, stake IOTA to claim Shimmer, and then you get 1 IOTA. So for every 1 IOTA, you get 1 Shimmer, and you can stake it up to 90 days. You receive continuous rewards. So you'll be rewarded every 10 seconds. So staking calculator. So I have, say, 1,500 IOTA, and there's only 64 days left to actively stake. So we already missed out on 26 days, but we found it now. So I'll take 64 over none. So we can do 1,500 times 64, calculate, and this is how much Shimmer it would be. So if you had 1,500 IOTA staked in 64 days, you're gonna get 829,440,000 Shimmer. You're gonna get 829,440,000 Shimmer off of just 1,500 IOTA, which I believe IOTA is at like maybe $1. So for $1,500, you're gonna get almost $1 billion of this token. I don't even think this seems right, but if this is right, that is a steal. So if you have IOTA, you definitely want to participate on this. Or if you don't have IOTA, maybe now's a good time to scoop it up on this dip and take advantage of this staking, because that is huge. I don't know how many tokens they're going to be releasing for max supply, but just for 1,500 IOTA and that much, that goes to 10 cents, a penny, tenth of a penny. Still looking at big money there. So airdrop alert, and we'll be posting directions and how to do that in the Discord. So now let's jump into a quick daily market update and see kind of where we're at with the price. All right, so we're going to start off with Bitcoin on the daily chart. And right now I want to look at the fear and greed, because of course we're going to be in fear right now. So you see that fear right there. And then look at the last time that we were in fear or extreme fear, right? That was this area right here where we had that sell-off back from May. We went down like 50% in a few weeks. And then we had extreme fear as well as fear as well there too. And then the same kind of thing that happened. A few weeks, we've gone down 50% and we got fear again. So we can pull out the levels for the TSI, and we can see that we are at historical support levels. Look at the COVID crash. Look at that level where we had the COVID crash. This is Bitcoin, yep. And then look at this level for the TSI here where we bottomed. here where we bottomed, and then we went, the only time we went below this level on the daily chart for the TSI was here in 2018 at the bear market bottom. So as far as being oversold, I could definitely say that is the case, because you can even see all the way back here. We're gonna scroll all the way out, go to 2015, all the way till now, and we can see there's probably, there's only one time in 2015 on the daily TSI that we touched this level, and that was the bottom. And then we breached this level 2018, and that was the bear market bottom right there. And then here we had touched it, and that was a local bottom. And then here we had the COVID crash, 50% down, touched it, supported by it, and it was the bottom. And then after the May 2021 crash, we came right down to it, bottom right there. And then look where we're at right now, same level, same level. So sitting at January 2022, TSI is sitting on the same horizontal level of support that we previously bounced at. And then if I pull out this horizontal support for the RSI, I'm sure we're at levels that, same type of levels, yep. So we haven't touched this area since May 2021, COVID crash, March 2020, October 2019, bear market bottom in 2018, and then every single dip, July 2016, down 50%, January 2016, and then bear market bottom August 2015. So as far as being heavily oversold, we definitely are. Does not mean we can't keep going down more though. So you want to see us definitely defend this $29,500, $30,000 level. If we don't, it does not look good. We'll likely come down to test the pink Fibonacci moving average. I think we would break right back down through 20K. I do not believe we'd get supported by there. I believe it would be down to like 13 to 14K if we were to break that level. Because look what would happen if we broke the 40 to 39,000 level. I'm sorry, 29,000 to 30,000 level, right? So we'd be breaking this previous horizontal support of so much importance. All this time, January 2021, support, back to May 2021 to July 2021, all support here. And then if we were to fall down to this level, then you definitely want to see us hold it because it's proved to be a key support level. Plus you have the great Fibonacci moving average perfectly in sync with that spot, that if we were to come down here, it would be a perfect support level to bounce off of. But if we did break below and then we came up and we were trying to come up and get above it again, we're getting rejected, it's likely it'd be a straight shoot down to those levels. That would not look good whatsoever, because then we're switching previous support, so if we broke down below, into new resistance. So we would have to come back down and test some of these prior resistance, now support levels, right? So this 14K level is like a perfect resistance zone that proved in the past that if we were to break this great Fibonacci moving average and this horizontal key support, right here, then it's just likely we'd come and we'd have a sharp waterfall down to the pink. Do I think it's likely? No, but again, this is crypto, so we always got to be alert. Does it change my thesis about how I feel about crypto if it's going to be here to stay? Not at all. That's just another opportunity to get cheap crypto. Personally, my strategy is accumulate like it's going out of style. You know, that's how I feel about it. And that's what that is. Like, I believe that just keep on scooping it up in time with patience, and in time the prices will be up higher. So if you're just looking to do the long term and buy for long term, now is a great time to start dollar cost averaging in some positions because we're so low. If you're looking to do short term trades at these levels and start shorting and all that stuff, I just don't believe like this is a great time to do that, given like we're on previous key support and you don't really want to start shorting at a key support level after already falling 50%. So I'd be looking for longs at this point for a bounce back up. So if I were to do leverage, I'd be looking for a bounce back up. Maybe we get rejected here, and then if we start to curl over and the indicators as well as the price, then we know, hey, maybe we'll put in a short at this point, but not right here. I don't think I would do it right here. So that's what I'd be watching. And then let's check XRP. So XRP right now, trying to flip the EMA ribbon on the 15-minute, 1 hour chart. Let's see it. Stock RSI cooling off here. MACD starting to curl. TSI starting to curl. Yeah, probably retest. Yeah, try to come up to the EMA ribbon, break it. We couldn't. Maybe come back down. Test the blue Fibonacci moving average. Have this 200 moving average come down, probably to the 618 Fibonacci, and then we'll bounce off this and then retest this. Have a convergence of the EMA ribbon and the 200 moving average, and then we'll see what happens there. If we break above, hold the support, then we can go. If we break down, come up, get rejected, then we're coming back down to retest these levels again. But I really want to see. We already know the key levels for XRP. You really want to see it hold where we're at now, because on the weekly chart. Look at the weekly chart. We have the body candle close above the Fibonacci moving average right now. This is the 200 weekly moving average. And you can see that every single time we got supported by it and then rejected by it, supported, and now we're holding support at it right now. Definitely a good level to load up. I can't believe XRP is at 60 cents. If I had a ton of money, I'd be dumping it in there. I would be dumping it in there. If you've been holding on for a bit about when you should put more money in, dollar cost averaging right now, and then because you know which level to sell out from if we break below it. It's only a 10% risk to a very high reward. So I'd be taking that trade. But we have on the 3-day, I think we have like we have the 3-day buy warning. So we're just waiting for those indicators to cross back up. Then we'll know the blood is over, and then we're going to start to revert back to the upside for at least a bounce. You obviously want to get us back above the 75-cent level and then back above $1. And you know, now that we keep breaking key support levels, now they're levels that we need to get back above. So it's just like a stair. That's how we have to do it, you know, level by level. So yeah, this Sunday, I'm going to take the rest of the day to get my personal life in order, but I will see you guys in Discord. You guys have any questions, you guys can always reach out. So I'll see you in there.
Hey, let's run up a milli. If you're trying to kiss ass, better get a room.